Here is the technical analysis for S&P 500 index for the week starting from 26th of April 2021. This is the weekly chart, and these are the weekly candles. If you see this, the last candle which was formed recently for the week 19th April 2021, then it's a doji candle. A doji candle often represents the indecisiveness in the market, which then indicates that the market is now going to change its course. The same thing we have seen on the Dow Jones chart for this week, 26th April 2021. So on the Dow chart, there was this hammer. A hammer was formed. A bearish hammer was formed. So that was again an indication of the reversal in the market. And on S&P 500 index, we can see that there is this doji candle, means indecisiveness in the market, which clearly indicates again that the market is going to fall, and it will come into the correction, which is the need of the time. Secondly, the market was supposed to hold here on this critical resistance. However, it did not, and now the market is now it is seen that the market is going to respect this resistance. So as I told you in my last and last to last videos, that even if the market cross this critical resistance, then sooner or later market is going to retrace, and it will come and it will again respect the resistance. Now this resistance is acting as support. So when the market comes into the correction, then it will respect this support, then it will cross and it will close below this resistance, and then it will further fall to this support. Now let's talk about the indicators. If we talk about the moving averages, then you can see that the nearest moving average ALMA is at 3856, whereas the market is at 4180. So there is a good deviation in the price from its moving average, the nearest moving average ALMA. However, we always consider the exponential and the weighted. So if we talk about the exponential moving average is at 3600, and the market is at 4100. So there is very heavy deviation from its moving average, which is indicating that it is the need of the time that the market must now come into the correction, and if it do not come into the correction, and if it fails to come into the correction, and if it keeps on going up, then for sure the market will create a bubble. So this bubble will not be good for the market and will not be good for the economy too, which is why all of these expert traders, okay, hedge funds and everyone, people are now thinking that the market must come into the correction. This is the need of the time. So my advice here is to be very careful if you are long, because your long positions, because market can retrace anytime, and then whatever profits you have earned, you may lose the profit. So if you are holding the long position, then make sure that you are holding the long positions with the stop loss. Do not trade without a stop loss. um, Now let's talk about other indicators. So here if we talk about the stock RSI is supporting the bullish trend. It is it is bullish stock RSI on the weekly chart. If we talk about the MACD is also supporting the bullish trend. If we talk about the momentum, then there is not enough momentum in the market. So which means if we consider all of these factors, all of the indicators, then the summary is that the market is expected to come down, and market must come down. Market must respect these moving averages, and it must fill the gap of this, the deviation of the price from its moving averages. This was a technical analysis on the weekly charts. Now let's move on to the daily charts. Now this is the daily chart and these are the daily candles. So if you see these daily candles, then look here. On 19th of April, it was a little bearish. On 20th April, then further down. On 21st April, up. 22nd April, down. 23rd April, up. So like up, down, this kind of thing. So here the market is showing the weakness, clearly the weakness. The market has shown the weakness, as I told you in last week in the technical analysis of S&P 500 index. So I told you that the market will start showing the weakness from the week of 19th April, or it may come into the correction in that week, but it did not. But yes, now in the coming week of 26th April, the market is expected to come into the correction, and it is expected to respect its moving averages because of the deviation from because of the deviation of the price from its moving averages. And if we talk about the indicators, then all of the moving averages, the pattern of the moving averages is supporting the bullish trend. However, the pattern will not be much helpful for the market, because the market has started to show the signs of weakness. And we talk about the support and resistances. This is the immediate support, which was acting as the resistance earlier. So this is now the immediate support, which is at 4,100, and the market will breach this support. Then the market will respect its first moving average ALMA, and then the WMA, and then the exponential moving average, which will then be around 4,000 something, around 4,000, maybe 4,020, 4,010. Then the next good support lies here. Okay, this one, and this is around 3,964, on 3,950, you can say 3,950. And because also here we can see that there is Ichimoku. So Ichimoku, along with this support, the confluence zone. So this Ichimoku and the confluence zone will provide a good support here. However, because the price of S&P 500 has deviated so much from this moving average, that it is expected to fall, and it is expected to hit at least this support, which is around 3,850. So this will act as a good support whenever market comes into the correction. And if we talk about the other indicators, then on the daily chart, the other indicator, stock RSI, has clearly shown that yes, that there is a weakness in the market and the market is going down. Stock RSI is clearly showing that the market is going down. There is a weakness in the market. If we talk about the MACD, then MACD, it on the last day, the MACD has shown that yes, that the market is getting bearish. Market is getting bearish. If we talk about the momentum, then the market has lost its momentum on 20th of April. Until 19th of April, there was the momentum that was supporting the bullish trend, but on 20th of April, the market lost its momentum. So considering all of these factors, I'm expecting the market to come down and to be bearish in the short term, and this is the need of the time. This is actually the need of the time. Okay, so this is basically how the stock market works. So means in general, the price must not deviate that much or from its moving average, primarily on the weekly chart. This was my technical analysis for S&P 500 index for the week 26th April 2021. Should you have any questions or queries, you can write your comments in the comment box. Should you wish to participate in my profit booking programs, then I have given the links of these programs in the description of this video. You can take a look.